All right, let's dive right in. We are pulling back the curtain on a really fascinating trend that's happening right now, mostly behind the scenes. And it involves some of the world's most powerful financial players and, well, one of its oldest assets.
So what is going on here? While most of us are distracted by the day-to-day headlines, there's this quiet, massive shift of money happening, and it's not going into tech, it's not going into crypto, it's going into something much, much older. And this slide just perfectly illustrates the disconnect, doesn't it? I mean, all you hear about in the financial news is AI, the latest stock market records, the crazy ups and downs of crypto. But behind all that noise, central banks, the institutions that manage entire national economies, they are all laser focused on one thing: gold, gold, gold. So the big question is, why? And that brings us to our first major point here: the sheer unbelievable scale of what we're calling the silent gold rush.
Look, the scale of this is absolutely staggering. According to the World Gold Council, central banks haven't just been buying a little bit of gold. In the last few years, they've bought more of it than at any other time in modern history. We're talking about a truly historic level of accumulation. It's off the charts.
So who are the biggest players in this game? Well, we're seeing huge economies like China, India, and Turkey leading the charge. For a country like China, for example, this is a massive strategic move. They're trying to diversify their huge reserves away from the US dollar, which reduces their financial dependence on another country. These aren't just small adjustments. These are huge shifts in national strategy. And here's the puzzle, right? This is what seems so weird about it. Gold, it just sits there. It doesn't pay you interest like a bond. It doesn't give you a dividend like a stock. From a modern investment point of view, it seems kind of counterintuitive. So why on earth are the world's smartest financial institutions stocking up on something that doesn't generate any income? Well, the answer comes when we start to think about gold in a totally different way. It's not an investment you buy for growth. It's a tool you own for survival. It's financial insurance.
So here's the key idea. When you buy car insurance, you're not hoping to get into a crash so you can cash in, right? Of course not. You buy it to protect you if something goes terribly wrong. That is exactly the role gold plays in a big-time portfolio. It's your safeguard against the worst-case scenarios, things like a huge economic crisis or a collapse in your other assets.
And listen, this isn't just a theory. Let's think back to 2008. Remember the financial crisis? As banks were literally on the brink of collapse and stock markets were in an absolute free fall, where did everybody run? They ran to gold. Its price shot up because in a moment of pure panic, it was seen as one of the only truly safe places to put your money. It's a pattern we see over and over again.
Okay, so that explains the principle of gold as insurance. But what specific risks are these central banks and billionaires seeing on the horizon today that's making them buy so much of this insurance right now?
Well, one of the biggest drivers is a deep fear of currency instability. For years now, whenever there's a problem, the solution has been for central banks to print massive amounts of money. Now, that might help the economy in the short term, but it creates these huge long-term questions about the future value of currencies like the dollar. Gold acts as a hedge against that risk. It's like a safety net in case the value of our money starts to fall.
The second huge factor is geopolitics. I mean, just look around. We live in an increasingly divided world where financial sanctions have become a common weapon in global conflicts. And if you're a country and your foreign currency reserves can be frozen overnight by another government, well, then those reserves aren't really that secure, are they? This makes a neutral asset that nobody controls incredibly attractive.
And this quote just nails it. Gold belongs to no single nation, no single political ideology. You can't sanction it out of existence. In a world of competing economic powers, that neutrality makes it an unbelievably valuable strategic asset for any country that wants to protect its financial independence. So when you start putting all these different pieces together, you realize this isn't just about managing risk. This is about nations positioning themselves for a potential new global game. And what's so important to get here is that these guys are not short-term speculators. Central banks think in terms of decades, not financial quarters.
They are making strategic, long-term chess moves for a future where the global financial system might look very, very different than it does today.
You could say they're preparing for a range of possible futures. Scenario 1, things kind of stay the same, with relative stability. Okay, fine. Scenario 2, we see rising instability, maybe from debt crises or runaway inflation, but it's really Scenario 3 that they're hedging against, a fundamental, ground-shaking change in how the global money system actually works, a world where gold might once again play a much more central role.
Okay, so that's the big, grand, global strategy. But what on earth does any of this mean for the rest of us? How can we apply this lesson to protecting our own wealth?
The big takeaway here isn't necessarily to run out and buy a bunch of gold bars. It's about understanding the principle behind what these smart investors are doing. The core strategy is all about building resilience. It means having a plan for the risks you can't predict, and it definitely means not putting all of your eggs in one single basket.
And this chart is a perfect way to visualize that idea. A really well-built portfolio has different assets for different jobs. You hold stocks for growth, you have bonds for stability. But an asset like gold plays that unique role of insurance, precisely because it often zigs when everything else zags. The very crises that can crush your growth assets are often the exact moments your insurance asset becomes the most valuable. It's all about balance. So, to wrap this all up, this quiet hoarding of gold by the world's most powerful financial institutions, it tells us something really profound. In our modern, high-tech world of AI, digital currencies, and everything else, this ancient physical metal still commands the ultimate respect as a store of value. Think about it. It has survived every empire, every currency, and every financial crisis in human history. And that leaves us with one final, very important question to think about. As we all try to navigate an increasingly uncertain future, what is your financial insurance?